Hello and welcome to our latest healthcare property update from Barwon Investment Partners. My name is Nina Dunn and today I'm joined by Tom Patrick, who is a partner at Barwon Investment Partners and heads up our healthcare property division. Tom, can you talk us through how the Barwon Healthcare Property Funds have fared during COVID compared to traditional property asset classes?
Barwon manages over $1.5 billion in funds for our investors across healthcare property, and we have a team now of over 40 investment professionals. We've been investing in healthcare real estate for over 8 years, with our two healthcare funds returning 10.3% and 13.5% per annum net of fees since inception respectively. During the pandemic, to your question, healthcare property returns have remained resilient really relative to other core real estate sectors. Annualised total returns for the healthcare sector have returned in excess of 10% per annum, pleasingly with income returns remaining pretty stable at about 6%. So I think this highlights the resiliency of the sector during periods of market dislocation and uncertainty. And for us at Barwon, the Barwon Healthcare Property Funds actually delivered their best results ever during the pandemic, with the Barwon Healthcare Property Fund delivering a 12-month total return of 19.78% and the Barwon Institutional Healthcare Property Fund delivering in excess of 35% to December 21. So we're very pleased with those results for our investors, and I think fundamentally this result was underwritten by our portfolio's ability to provide good steady income to our investors during the COVID period. We were able to accrue in the order of 97.5% of our expected rental income during those periods.
There's a lot of economic commentary at the moment stating inflation will remain elevated in 2022. Tom, tell me, how is the portfolio placed in an environment of rising inflation?
Well, like any traditional commercial property, healthcare properties should act as a good hedge for inflation, and will be able to rebase with inflation over time. I think this is especially important if the current transitory inflation environment does lead to permanently high levels of inflation. All of that being said, not all commercial property is created equal, and so I think investors want to look closely at the assets or the portfolios that they're considering, to determine how much of the cost base is being passed through to the tenants. So really there you're talking about net leases versus gross leases, meaning that investors will either be exposed or not exposed to cost price inflation. And from there, having a good close look at the assets or the portfolio's ability to rebase rents or revenue in order to keep pace with that inflation. So this would be either in annual or frequent market reviews, because without that you will be chasing real returns in an inflationary environment. This is an area I'm pleased to say we've paid close attention to over the last few years at Barwon in our healthcare property funds. So the Barwon Healthcare Property Funds, I think, to your question, are well positioned to deal with an inflationary environment. The majority of our leases are directly linked to inflation, so we'll be able to rebase the majority of our rents on an annual basis. And the bulk of our leases also have been set on double net or triple net type arrangements, meaning we'll be able to pass on the lion's share of costs associated with the ownership of those properties to the tenants over time.
Thanks, Tom. Thank you for joining us today for Barwon's Healthcare Property Update. If you'd like more information on how to invest, please reach out to Barwon's distribution team.